Okay, everybody. We're just about 3 minutes away. I've got some folks coming in from my signals channel, so they'll be here momentarily. We'll definitely get you ready for the Asian session. Lots of stuff to talk about today. That's for sure. You guys should all be able to hear me, regardless of whether or not you're in the Discord or uh, whether or not you're on YouTube. If you are on YouTube, feel free to subscribe. Hopefully, you'll be able to see these regularly. I'll get into what I do and how I do it here momentarily. But yeah, I tend to do these market previews. I also do a market preview in the morning for New York at 9:15. I also have one probably midday, somewhere between 12 and 2. And then I have a market debrief at the end at 4 o'clock. And then usually every Sunday at 7 o'clock p.m. Eastern time is when I put this out. And that's what you guys are seeing here. We'll go over all the markets that you see on the screen, as well as I'll answer questions at the end. This probably is somewhere between 30 to 50 minutes, sometimes a little bit more. If you've got questions, feel free to chime in on the chat. I am monitoring the chat on both YouTube as well as in the Discord. So if you have a question, please let me know, and we'll go from there. I'm about to start very shortly here. Give it 1 minute or two. Give it a little over 2 minutes, and then we'll start. All right, here we go. Ladies and gentlemen, and fellow traders and speculators and folks interested in the markets, this is the market preview for the Asian session for the week. It is 7 p.m. New York time. I'm Ceres Trader, also known as Michael, and I'll be your guide here over the next 30 to 50 minutes, where frankly I'll just run through the markets and where I see things going and how we're profiting from it. For those that don't know, I am Ceres Trader. Got close to 900 followers on TradingView, and have done quite well in terms of trading. But everybody kept asking for my help, and so the way that I'm doing it is frankly through this Signals channel, as well as through the Discord and the Telegram. And that's where you find not only my signals, but as well as additional analysis intraday, as well as across the day. A bit about my trading style before we get into it. I try to be a swing trader, so I do try to get some bigger chunks out of the market. If necessary, I can day trade, and you will find that quite a bit. But I would really like to have my day trading actually turn into swing trading positions, and I'll share with you just how we do that. Ordinarily, I am looking at the market through a lens that is primarily driven through Fibonacci. So I am very big about Fibonacci levels, but I'm also really big about break-even stops and take profit stops. One of the things that you'll notice is that I will advise all of my folks, when we hit a level and it starts going our way, I will certainly, when you've got 500 to $1,000 in profit, I'm going to start to say, hey, take your stop to break even and start trailing it. It's a really big piece of trying to become more consistent in trading, and that's what's helped me get to where I am. I run about somewhere between 5 to 7 prop accounts for my own trading account, and I have primarily with a group called Top Step, but I have worked with Apex and a few others in the past as well. So that's a little bit about me. Let's get into the charts, and we'll actually start off where we always start off, which is frankly the dollar. And so the dollar has a massive impact because, frankly, just about everything that we trade or everything that I trade is dollar based. And so when the dollar goes up, there is a tendency for those asset values to go down. All that being said, gold has been the big, really the big difference in this, in the sense that gold has actually rallied with King Dollar. But I do want to advise all of you that, the dollar has been in a massive bull run, frankly, since 2021. And if you want to go back to 2021, we can go back even further, but let's just go to 2021. You'll see that we have traded from the lows of 2021 to the highs of 2022. We traded in February of 2023 and July of 2023, what's known as a halfway back long. That halfway back long has a massive objective all the way up at 120 on the DXY, on the Dixie, the dollar index. And what that means essentially is that the dollar is going to continue to rally and rally well. Now, what you'll notice is that on the daily charts, levels tend to be tested, retested, and tested again. That is exactly what has been happening basically for the last year. Since February of 2023, we have tested this 101 level once, twice, 3 times, and 4. And then what you'll notice is that after December of 2023 into January, we had been on this uptrend. And the way that I like to do it is simply low to high with a fib and look for a 50 to 61.8% line retrace. We actually went beneath the 61.8% line once, but we ended up holding it pretty much. We didn't go too far beyond it. And then we actually, within 5 days, traded back up, and we've been trading up ever since. And this is from the March 15th timeframe. So what you'll notice is that we've actually set in place an intermediate objective of 107.89 on the daily chart. And what has happened is you're seeing a expanding wedge pattern in the dollar. Over the last 2 weeks, the dollar has been in a bit of a I just lost my screen here. Now I got it back. The dollar's been in a little bit of a channel, bear channel or bull channel, actually down. And so that's what you're seeing here. Let's continue on. What the dollar can do, there's really 3 scenarios. And I think in some respects, you're seeing this first scenario play. This is a daily chart. So the fact is this bull channel can continue to kind of play. If the dollar comes down, you might see some upward movement in those in those dollar assets that are inverse. And that could be gold, could be silver, as well as oil. All that being said, there are times when gold, silver, and oil will become positively correlated with the dollar. And it's rare, but it does happen. It's not a one-to-one correlation. So you do have to keep that in mind. But what we're seeing is, at least today, the beginning, my hope here was that we were going to see some additional dollar increases, and we would actually start running through this channel, and we would see 107.14 trade and ultimately 107.89 trade. If we saw those trade, gold would probably sell off pretty significantly as well as oil would sell off as well. So something to think about. But the other scenarios are still bullish. It just may take more time and a little bit deeper drop. We have a scenario where from this low to high, what I can do is I will actually redraw some of these so that you guys understand a little bit about how I'm drawing them. So basically what's happened is that we've been going up in a series ever since. And so you can actually see that 50% line get hit there, and that's taken us right to the objectives. We saw another 50% line, actually a 38.2% line trade from the all the way halfway back. And then we could go down if we went all the way halfway back down to this level, 104.44 to 105.93. It's not my favorite scenario. That's actually scenario number 2. My favorite scenario, and the one that I think that is likely, is that from this low to high, at around the 50% level, we're going to come back down, trade this 50%, and then move much higher using this trend line as a guidepost. And so, we are in an expanding wedge, and I think that ultimately that's probably what's going to happen, and it might take another week or so to get down there, but ultimately I think that that's what we're setting up for, especially since we're not breaking out right now or any of that. It's still early in the week. It's still possible. We do have some moving averages that could double as support and allow us to start to move up, but either way, bullish a dollar. And, being bullish a dollar does lock in some things in terms of these other things that we actually trade. So let's look at oil. And for those that don't know, we've been short oil pretty significantly. And I'll go through the entire analysis and why we're still short oil. But what you'll notice is that on the larger time frame charts, and we'll go actually look at the daily, oil is in a little bit of a resistance level. Yes, it has rallied from the lows that we just had, but there is from the top, we've actually traded resistance once already. And that resistance did trade in September of 2023 on the daily time frame from the top. We challenged a 50 to 61.8% level, and we've since sold off ever since. Now we're retesting this 50 to 61.8% level. And so far, we've actually sold off. Now, I would have liked to have seen it actually top and keep going to 93.14. But here's the thing. We're coming up against some very difficult seasonality for oil. And when you look at oil, what does oil tend to do between March and June? It tends to drop. And especially if you look at last year as an example, March we had a high, we sold off through May. There's a little bit of a bounce, but honestly, we did not see a move up until the end of June in oil. Guess what? If we do this exact same scenario this year, well, we're on schedule because here comes March. We go through a high. We're selling off a little bit through April, and we come back, and we're still in a position, frankly, to see lower lows. Now this is on the daily chart, and so again, I would have liked to have had a little bit more of a rally so we could sell right up against this peak, but that's not what's happened so far. And then when you look at the lower time frames, this is where the rubber meets the road. This is where, frankly, I get my trade ideas and set up trades, is the fibs at the lower time frames. And here's an hourly fib. We'll go from the peak here to the lows, and the lows of April. So this was basically a 3-day trade, Friday through Monday. And when it had the rebound stopped between the 50 and the 61.8% line. Perfect sell. And then later in that week, basically it sold, and then it sold off pretty significantly from 85 to 81. And it sold to the second target TP price. That's the negative 61.8% line. What ends up happening is Israel attacks and forces the oil to go up significantly in basically an hour or two. And we ended up retesting that same level for a second time. It's, in my parlance, it's the second test. The second test is your most dangerous test. If gold or oil were to rally and rally through that level, it could have kept going and it would have been very bullish. What did it do? It stopped, it reversed, and it sold off significantly. We sold off back to the bottom of the range, and that was essentially setting up a range trade that is bearish ultimately, but has been basically range bound over the last week. And now we're at a level, when you take this fib all the way down, we're at the 50 to 61.8% level. And this is where I've been selling it really over the last 3 days. And even into today, I have my expectations are for lower lows here in oil. I ultimately think that we're going to see 79.22 and 76.76 in oil in the not too distant future. And, again, this level is really important. I'd like to almost see a second test of this level. So I would say that anybody who is short just has to recognize that you're short at a great level, but there is a chance that you come up for a second test, much like what we did back here. One test, two tests. We've got our one here. Now, are we going to get our second one? I'm not sure, but you should always recognize that that's a possibility. So again, if we've been short essentially at this level, I think I've been trading this range back and forth, honestly, because it is the short level, and so you've got some opportunities when you are short to take advantage of some dips and some dives. But ultimately, I think this 84.45 level is the highs for oil. Now, again, will we get there again a second time? Possible. And what you might be able to see here is that there is potentially a range that there are some traders that are trying to buy. Ultimately, they're going to be disappointed, because if oil cannot break this 84.45 level and this 84.71 level, where we're headed is lower. And I do think that we are headed lower just because of a couple of factors. One, it looks like Israel and Iran has, in terms of its geopolitical challenges, are getting through it. They're going to always compete against one another. They're going to always be military adversaries. But frankly, the activity over the last week has tamped down significantly, and that whole risk premium is going to go away in oil for the geopolitical concerns. The other element is you've got that seasonality, which is coming into play. Because for in terms of the summer driving season in the U.S., a lot of these refiners have already bought their oil that they're going to need for the summer driving season. So that's part of the reason why the oil prices tend to dip here between March and May. You might get that reprieve in June, late June, July, when those refiners will need to hike up things. But if you're going to be long, it's probably best to be long natural or unleaded gas, RBOB, as opposed to crude. The other thing too that you should be concerned about if you are trying to be long this crude oil is the fact that the U.S. continues to just pump crude oil like nobody's business. We are pumping at a record level, and these prices actually just incentivize U.S. producers to keep pumping. Now, that has had a perverse impact on natural gas prices, which is a byproduct of crude oil, which keeps going down. That could be another discussion for later on, but certainly from a crude oil perspective, these high prices do encourage a lot more pumping and drilling. So recognize that is in play. That takes us out of crude. Let me know if you guys have any questions about crude going forward and that sort of thing. But that's crude oil, and then we'll get into gold, and eventually we'll get into the stocks. But gold has been very strong for everybody. Just it's unlike while crude has rallied with the dollar, gold has actually gone even beyond that, and so gold has rallied significantly. But there is a bit of a fly in the ointment, and that is when you have these big wicks. What does the gold market tend to do? It likes to sell off for a week or two, and then we'll see what happens. But here we are with a big wick again. We actually kept going up, which was interesting. It wasn't exactly like what you saw in December, so you can't draw a complete rhyme or reason to it. But the fact is, eventually, we ended up selling off. Now, one could say that this is a double top, and I would say for the time being, there isn't anything to deny that, partly because the retracement has been very weak, relatively speaking. And when you look at the way that we've retraced and in the length that we've retraced in gold, it's frankly been pretty light. It has not been as heavy as in terms of a retrace, and it hasn't been shallow. It's been pretty significant. Here's a shallow retrace, and literally, I think this retrace was only about $30-$40 from the high to low. We've already gone from 24.40 down to 22.91, so we've gone 140. So we've gone 3 times more in terms of this retracement than we did in the March retracement. So that leads me to believe that there is potentially something a little bit more serious in terms of a decline. Now, where are the levels? And I think that the challenge is that we're still trying to determine whether or not this is a true retracement or if it's the start of another bull run. Either way, last week was certainly a relatively bullish week, and I think that we had some counter trend longs last week. We were also taken back by, frankly, the massive ups and downs of the range. But I do think that ultimately where we're getting some issues is right in the bear fibs. And you can see right there on the daily chart, we did trade. We have had some wicks. The wicks have gone up. There has been a bit of a channel here, and you'll see that on the lower time frames that's been built. But ultimately, so long as you stay underneath this 2378, you really do have targets that are significantly lower, and you could see 2259 as well as 2206. Let's get into some of the lower time frames, because I think that that's where ultimately we find ourselves trading for the most part, and that's kind of like how that's generally how I will look at signals from gold, is looking at it on an intraday time frame. I'm going to clone this channel here. And the way that I view this channel is that I view it not as an uptrend, but I view it as basically a bear channel. And the bear channel does have a tendency to go up, but it also has a tendency to fail at some point. And there's a couple of reasons why I think it's going to fail, but you might actually just simply need to look at the silver chart. Silver, and I'll show you here in a little bit, will actually has gone through its channel and is trading below it. That's generally a bad sign. You want silver to rally if gold's going to rally. The other thing that notice is that on Friday, late Friday, we actually traded a halfway back short from the top of the channel to this to where we're at right now, with targets that are below the channel, 23.23 as well as 23.13. If you did notice, for those that are on my signals channel, I did put this short out there late on Friday. It was frankly a tough trade to take at 23.40, partly because it was very late. It was 1 and 2 o'clock when I actually put it out there. And so, you didn't have a lot of time, but the market did observe it, and it basically sold off ever since I put that out there. And even on the 15-minute chart, you can see it really did not start to take until 4:45 when it started to dive. And so what's happened is today, so far we have still observed this short, and it seems good. Now, what ends up happening is you generally will get a second test of key levels, always. Sometimes a third, sometimes a fourth. So right now, I'd actually say that there's probably a pretty good chance that we're going to rally back up to 23.41. So it's a $6 move higher, and we'll retest this level, maybe even go a touch higher, take on some liquidity before we ultimately drop. But I still do expect a drop to occur, and so that's part of the reason why I've been bearish. But you'll see in silver, silver hasn't done much, and as long as silver continues to kind of go down or at least be sideways, gold will be kind of locked in as well. So let's move over to silver. And here's silver. And one of the things that you'll notice is that it's this channel here that I want to highlight. And you could say that, however way you want to draw it, but we've had multiple tests of silver at this level, and silver is still, frankly, trading a short here. I will share with you that silver short, basically from highs up here to lows down here. Silver can't even get to the 38.2. And so silver has been weaker than gold. And you can see the tests that silver has tried to do to get above, and it has failed basically each time. So if this is the channel, it's trading below it. And, until silver breaks out, trades through this channel and goes higher, gold probably is also going to sell off or at least be neutral. And so that's kind of why I'm still bearish on gold and ultimately bearish on silver. So silver, what did silver trade? One could say that silver actually got front run at this fib and actually traded a very bearish 23.6% line. And that's the one that it had trouble with the first time. It didn't get there. The second time it got there. The third time it hit. The fourth time we got through it, but then we failed back beneath it. So it's this 23.6% line. If it can't rally above this 23.6% line, gold ain't rallying either. And so that's the bearish call on gold and silver. Now, ultimately, silver does have a big objective downwards, and that's the other element to this, is that if silver does start to trade down, silver's got a $1.20 move down, and what that does for gold is take gold down significantly. So remember how you saw some of those lower levels on gold? Well, you could see those lower levels pretty easily if you see silver head towards this level. All right, that's silver, and then we'll get into the stocks. YM, NQ, ES. Those were our big winning trades last week, and I'll give you the reason why. Essentially, when you look at on a daily chart, we actually had basically the month of April was pretty much all down, and so we ended up looking for and receiving a gift of a trade, a counter trend long trade that we ended up taking. And that counter trend long was from this high here. And we ended up buying it at this 61.8% line, 50.21 on ES. I think it might have been 50-30 actually was the trade. But we're sitting on a 100-point gain on ES right now. We're still long it because, frankly, I think that there is a bear channel here that has yet to play out. We've got a target of 51.67. So ultimately, I do think that we're going to trade that target. And then we'll hopefully get ourselves here into a long or short, actually. We'll be liquidating this counter trend long, but selling into a short, and hopefully riding this thing all the way down to a further bear level next week. Now, here's the setups that actually put us here, because when you look at this chart, it's a bit deceiving, and I'm going to put the setups here on a 36-minute time frame. And then I'm going to pull off all of these indicators, and we're going to only look at fibs. And I'm actually going to do I will do this fib here. So from the beginning, from the top, you will notice that ES had basically a double top. And when you go from that high on the lower time frames, you'll notice that every time you got above the 61.8% line, you sold. So there's sell number one. Here was sell number two. Above the 61.8% line, and we sold right to the objective. We hit the objective there, we hit the objective there. That's two shorts. Going for three. And I think actually got to use this one. Yeah, this one. And this one, we came close to the 50% line. We didn't get all the way there. And then what ended up happening is the market just kept selling off. So we ended up trading what I would consider a extension. And you'll notice the extension shorts from low to low actually held the fibs once, twice, three times and sold off. So there's your fourth. From that same extension short, we actually traded the 23.6% line, and we kept going down. We actually hit it. But, you know, after you trade something 5 or 6 times, you're going to get a retracement. And what ended up happening is for the 6th time, we ended up breaking this extension short. And once we broke the extension short up here, that was the 6th time, then you had to sign up, you had to look for the buy. And the buy was all the way down here. And I'm going to actually share with you exactly where we bought it and why. And for those on the signals group, if you know anybody on our signals group, this is exactly where I said we would buy, and we did, and this is why we're still long. Now, we have this 51.67 price target, and I do think that we're going to ultimately trade that 51.67. We actually could go to as high as 52.30, and there is a reason why this is all happening, and it is because we're basically, once we broke the series, we have to trade the all the way halfway back short. So if you do draw the lines, you can see that we're actually near the 50% level. But we have already a precedent of this market that loves to trade above the 61.8% line. And so that's the reason why I actually targeted 51, somewhere between 51.70 and 51.93, maybe even a little bit higher, maybe even 5200 in terms of the potential short. And so what we're going to be looking for is resistance up above the 61.8% line. That's where we'll sell. And ideally, that's going to put us into the next short, which will take us down to 48.76 and 47.35 on ES. And so once you understand how this market works, you can kind of understand and see how NASDAQ moves as well as YM. NASDAQ and YM, while they are kind of like the Harrier step cousins, YM trades pretty technically well. NASDAQ is nuts. It tends to do a lot of tricks and traps. It is not nearly as technical as YM or ES, but it still can be fun to trade, and it can be profitable. So let's take a look at those. Here is YM. And essentially, we also bought into, once we went through the same scenario, and so I'm not going to bore you with those details, but I would say that what you can look for here is a couple of things. One, we know that we're trading back above our all the way halfway back shorts. So yes, on YM, it's an interesting detail, but actually our halfway back shorts are up here. Sorry. Let me go all the way up. So YM is not nearly as high as ES, and you'll notice that there's some room for YM to frankly rally a little bit more. Again, there was a lot of these shorts here that traded. There was probably 6 of them. Once we broke the series, though, we went back, and here's the long that we got into. And I literally did call the bottom on this, and it's in our signals group. We have a bunch of folks that took advantage of this bottom here, and we've basically been long since Thursday morning. So that's 2 days. We probably will be long for another day or two, because I do think that there is more upside here. But eventually, we will trade the all the way halfway back short at some level, probably somewhere in this 38, 38, 83 level to 39, 233 level. And because it's the YM, it does tend to trade its 50 to 61.8% line more. What you'll notice is that ES tends to go a bit beyond it. So does NASDAQ. Hell, NASDAQ will trade its 78 or 80, 89% lines. Just because that's the way NASDAQ is. NASDAQ is not as technical. But here in YM, I do anticipate this to trade. We're going to, again, be looking for some sort of a topping pattern and some resistance up here. Probably spend a half a day, if not a full day, trying to penetrate some levels. We'll see it fail 3, 4, 5 times. And then that'll be a good spot to sell, and we'll be looking for the sell all the way down to 36,704. Either way, so far, we're sitting on 37,990 was our entry, and we're sitting right at 38,508. So, we've had a really nice run, almost 500 points, a little over 500 points here on YM. Significant gains. The one trade we did not get into, which was the NASDAQ, and partly because I have a love-hate relationship with the NASDAQ. Some of you guys probably do as well. It is not nearly as technical. Yes, it does trade fibs, but it has a tendency to overextend on both sides, the upside as well as the downside. But one of the things that you are noticing is that because even though it's the NASDAQ, it has initially it was probably the one that did not want to go down as first, and then once it has gone down, it actually is probably the one that is still challenged because it's not as it hasn't been as strong as the S&P. We're trading at the 50. Yes, it's stronger than YM, but it's not as strong as the ES, although it's probably close. Ultimately, we'll see what happens, but there's a lot of earnings that's coming out this week, and so there could be a lot of back and forth. The one thing I would say is that we're in these counter trend longs. I don't anticipate us staying in them. I do anticipate us selling here at some level. Now, we may break this 61.8% line, and honestly, if we do, I'd be looking at probably selling at 18,344 or 345 in that range. I think that'd be a pretty good short. But we'll have to wait and see how earnings play out, and I think the tech earnings is one of the reasons why the NASDAQ has been relatively difficult to trade, because you've had some really good tech earnings and you've had some really bad tech earnings. And when it's bad, it sells off and sells off a lot. When it's good, it rallies. And now this pattern looks actually somewhat bullish, and that's part of the reason why I do think that you could be long here stocks overnight into tomorrow, because we could easily rally up and take these levels, start taking these levels out through Asia. But ultimately, what's going to happen is that it's going to ideally sell off. Now here's where I can show you it traded below the 61.8% line, but that was the place to buy. And you notice how you've got on the hourly chart, you had some wicks down there. I could show you the 15-minute chart, and you had a lot of wick action, and you had a bottoming action, and so that was a really good place to buy NASDAQ. Again, we didn't do that because we are a bit more conservative, so I bought YM and ES instead. But yes, you could have bought NASDAQ there. You also had a 50% line that actually traded, and I'll show you that, from the lows to the highs up here. We traded a halfway back long at the 23.6. We didn't get all the way. Again, front run at the 23.6% line, and then they just took it up into new highs. And they're actually threatening to take it up into new highs and blow past this triangle, and that could be pretty bullish going forward, at least in the short term. And then we'll see what happens once it gets beyond the 61.8% line and up here, as I said. 18,316 could be, there's that 18,345 level. I still like that level, and that's frankly the level that I'm going to be looking at. So that takes us to Bitcoin. And Bitcoin, there's some, I think that some people on the gold thing, they don't think I know what I'm talking about with Bitcoin, but I'll tell you that Bitcoin for really since January has been in an extension long. And an extension long, it happens because we do not actually see a normal retracement. So you've got to go highs to highs. And what you'll notice is on the daily time frame, we have been trading an extension long literally since the middle of March. We've traded it once. We didn't even get to the 50% line of this extension long. We had a wick that went down there, and then we traded right back up to the highs of the range. We're in a balanced range at the highs, by the way. And then in the second test, which we just had in April, we traded only that 50% line once, closed below it, and then immediately the next day we rallied through it. We have not revisited that level yet. And what is happening right now is that there is a group of traders at the halfway back short from highs to lows in this balance range that actually have sold it at 66,712. So far, they're on the right side of the trade. The only issue is that what are we holding? Well, we're holding a low from lows to highs at the 61.8% line. We've held it once, twice, a couple days ago. This right now, we're trading this 61.8% line for the third time. If we hold here and we move higher, all of these shorts who were short up here are going to be in a little bit of jeopardy, and you might see a big spike up. And the only reason to get bearish is if we actually trade beneath this short and we continue to rally and we break this low and we ultimately break this 58 or 53,000. No, it's 58,049,490 level. That's the only reason to get bearish is if we're trading beneath this level. Otherwise, as long as you're trading above it, the bias is long, and the target is still 79,670. So that's what the charts tell me. We'll see. In the meantime, if you guys have any questions, comments, or concerns, let me know. and I'm going to actually, I know that some folks may have some questions. If you've got any questions on the Discord, let me know. If you have any questions on the YouTube, feel free to hit the chat. I'll be here for another few minutes, and I can answer any questions. Otherwise, I'm going to just call it a day. All right. Well, no questions. So I must have done something good, I guess. If you guys do want to sign up, let me know. Feel free to message me. I'm more than willing to help you get that done. And I'll for those that are on the signals, I'll let you know if I see anything overnight. But so far, things are kind of going the way that we thought they'd be going in terms of oil selling off and gold, continuing its ranginess back and forth. But we're still in good shape there, and certainly with stocks, I think we're in pretty good shape as well. All right, that's it for me. Thank you, everybody.